The Los Angeles real estate market continues its tug-of-war between inventory and affordability. This week's numbers offer some surprising mysteries, I would say, and a few valuable lessons. So let's dig right into it. This is the Los Angeles Real Estate Roundup for July 29th, 2024. My name's Jon Schwartz. I'm a real estate investor and realtor in Los Angeles, California. And we're going to start today with mortgage rates because quite awesomely, mortgage rates are continuing to stay under 7%. In fact, we've been under 7% since July 10th of this year. Right now, the average rate on a 30-year fixed-rate mortgage, according to Mortgage News Daily, is a rather comfortable 6.86%. And remember, if you're a well-qualified borrower in Los Angeles, you're going to see rates closer to 6.5%, even south of 6.5%. And that's good news because homes in Los Angeles are hella expensive. Now, it's been about 2 weeks since we did the last Los Angeles roundup because last week I did a California roundup. I'll link to that video right up there. So in the last 2 weeks, we have seen the median sale price of a home in Los Angeles climb up to a new peak of $932,000 and then fall off this past week to $928,000. You can see for the past few weeks, we've been hovering around the $930,000 mark, whereas 5 weeks ago, we spent several weeks hovering around the $910,000 mark. And looking at some statistics, it's actually rather surprising that pricing in Los Angeles is so high and is staying so high. Let me show you what I mean. Right now, we're looking at the percentage of pending sales that went off market in 2 weeks or less. And as you can see, this number has been rather static since we last checked in with it 2 weeks ago. We were at 30.1% then. We dropped slightly to 29.5%. And now we're at 30% even. But what you'll see going back a few weeks is that right now we're hovering around the 30% mark, whereas about 5 weeks ago, we were in the 26% range. So homes are selling a little quicker this period than they were a month ago. If you like this roundup of pertinent real estate stats for the LA market, head over to my website, www.househack.la, to sign up for my weekly newsletter, which includes numbers, headlines, and the kinds of deals you need to be aware of if you're a savvy homebuyer in Los Angeles. If we look at price drops, and this is the percent of active listings with price drops, we see something of a different story. The past 2 weeks have seen dramatic growth in price drops from 3.9% 2 weeks ago to 4.3% last week to 4.5% this week. And if we step back again, we can see that basically since April, the percent of homes with price drops has been climbing. Usually when price drops climb, prices fall. But as you saw, prices are about 20K higher than they were a month 5 weeks ago. Another telling metric is the new listing median price. This is the price at which new homes are coming to market. And when the new listing median price drops, that usually accompanies price drops overall. Now, in the past 2 weeks, the median price of a new listing first climbed from $944 to $953, and has now fallen to $939,572. And where we are now is a serious decline from where we were a month ago at $969,000. Again, that would suggest that prices right now should be lower than they were a month ago, not the opposite. So what gives? Why are prices stubbornly staying so high? Well, really, it's all in the fundamentals: supply and demand. Let me show you what I mean. Right now, we're looking at the chart of new listings, just 2024 and 2023. 2024 is the orange line, 2023 is the blue line. And as you can see, new listings for 2024 have come in above new listings for 2023 every single week all year long. Now, if we move down to this lower graph, this graph shows the percent change year over year in new listings. And if we try to track what's been happening this year, we can see it's kind of a straight line, maybe slightly upward. But I would say if this is the 10% mark and this is the 20% mark, we've probably averaged around 13% more new listings each week this year over last year. And in fact, I think that's exactly where we are this week. This week, we came in at 13.3% more new listings than this week last year. Now, new listings accumulate into active listings. And so even though we started the year at a serious deficit in active listings compared to last year, we've basically made up ground this whole time and now have way more active listings than last year. But if we come down to the lower chart, which shows the year-over-year growth in active listings, we can see that we actually peaked about a month ago. We were 21.52% over last year in terms of active listings, and now we've trailed down to 19.93% over last year in terms of active listings. So the amount of raw inventory on the market right now in Los Angeles, i.e. active listings, peaked about a month ago and is now about a percentage point lower relative to last year. In other words, inventory is getting slightly squeezed relative to a month ago. Now we're looking at homes sold, and this is the primary manner by which homes exit the housing market. And as you can see, 2024, the orange line, and 2023, the blue line, have been very much in lockstep for most of the year. These lines overlap each other. However, in the past 2 weeks, we see a divergence. The orange line, 2024, has really climbed up above the blue line, 2023. We can see this very clearly if we move down to the year-over-year change chart. About a month ago, we were underpacing last year's rate of sales by 0.7%. We've climbed, and now we are outpacing last year's sales by 5%. This growth means that more homes are coming off market as compared to last year. So even though the quantity of new listings coming to market week after week has been higher than last year's every week, we've begun to see a contraction of active inventory because more homes in the past few weeks are getting sold. And we can see where this trend is going by looking at pending sales. The pending sales metric tends to be a month ahead of the homes sold metric because a home goes pending about a month before it becomes sold. When a property goes under contract, it goes pending, and most escrows take 30 days. So a property goes pending about a month before it becomes sold. And for this data point, we're going to go straight to the year-over-year graph, and we can see that about a month ago, pending sales were at 5.1%, right there. What a coincidence that pending sales a month ago were at 5.1% over last year's pending sales, and this week, homes sold is 5% over last year's homes sold. So if we see where the chart goes, we see it falls down to 0.1% year-over-year growth, and then this past week pops up to 1.4% year-over-year growth. So we should expect fewer homes to sell in the next couple of weeks relative to last year, which in turn will help prop up active listings. And when there are more active listings, you can expect pricing to calm down. Of course, that leaves the big question: where are new listings headed in August? Are we going to be seeing more new listings coming to market to replenish inventory, or are new listings also going to decline, meaning that total active inventory will stay stagnant or itself decline? Subscribe and hit the bell icon so you don't miss next week's numbers. And to have these numbers in your email inbox, go to www.househack.la and subscribe to my weekly newsletter.